Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is a Forex quick look. I'm going to take a look at the New Zealand versus US dollar. We have New Zealand employment statistics coming out at 4:45 p.m. Eastern Time with expectations for an employment change of 0.3%. That compares to minus 0.2% in the last quarter. The unemployment rate is supposed to tick up to 4.3% from 3.9% in the third quarter. And the labor cost index for the quarter is expected to rise by 0.8%. That's unchanged from the previous quarter. That data is going to have implications for the New Zealand versus US dollar. And I thought I'd take a look at the technicals that are driving this currency pair. And we're kind of right near a very neutral level. So let's get started. All right, this is the 4-hour chart of the New Zealand versus US dollar. And the price action this week has been up and down. We made a new low going back to the month of November, all the way back to here in trading this week. We also rebounded back higher, and in trading here today, we reached the near the highs from that we saw on Monday's trade. In between sits a number of technical levels that are helping to define or will define the bias going forward through the jobs report. In particular, at the top right here is the 200-day moving average. That 200-day moving average comes in at 0.60856. And if we get a more hawkish or more bullish or stronger number, how about that, stronger number, the price should move above that 200-day moving average and potentially move up toward this 100-bar moving average in the 4-hour chart. That level comes in at 0.61124, and also this swing area right here up to 0.6125. Those are the targets on the top side on a more a stronger number from New Zealand employment data today. Now on the downside, there is other levels in play here, including the 100-day moving average. That's this blue line right here. That level comes in at 0.60639. And with the current prices trading at 0.6075, it's not that far, 12 pips to be exact, away from breaking below that level. And if we were to break below that 100-day moving average, I know we have been below that a number of different 4-hour bars this week, but it would tilt the bias more to the downside here. So currently, we are in between the 100-day moving average below, that's a blue line, and the 200-day moving average above, that's this green line, with each of them only about 12 pips away from each of those extremes. So you can imagine that if the number comes out either stronger, it would be pretty easy here to get above the 200-day moving average. If it comes out about weaker, it'd be a pretty easy move to get below the 100-day moving average, but it would tilt the bias in that direction. And lo and behold, with the price currently trading at 0.6078 of the price, or 76, the price is right near the 50% midpoint. That 50% midpoint is of the move up from the October low right here, this low right back here, to the high price that we saw in December. That level comes in at 0.60716. So we couldn't be in a more neutral spot here, honestly, technically for traders. Yes, the price has been moving more to the downside in at the end of 2023 into 2024, but we've seen somewhat of a stall near some pretty decent technical tools. More specifically, the 100, 200-day moving average and 50% midpoint of the longer-term move up from the October low to the December high. So, market's going to do what it's got to do after the jobs report. We'll see how that report comes out and pushes this currency pair, but there's a good chance we get a breakout. So there you have it. My name is Greg Michalowski with a technical look at the New Zealand versus US dollar. Good fortune with your trading. Bye-bye now.